FHA, First Home for All? First Home Assistance? What does FHA stand for? And is FHA a good loan program or a good choice for first-time homebuyers? That's what I'll answer for you right now. You want to buy your first home, but maybe you don't have 20% to put down or perfect credit. That's okay. If you're committed to a home purchase, then I'm here to help you do just that, maybe even sooner than you thought possible. My name is Scott Wynn, and I am a licensed mortgage advisor in Colorado with the Wynn and Egan team at Citywide Home Loans. If you want to buy a home in the next 12 months, then click that subscribe button, and together we'll make it happen. So, FHA. It actually stands for Federal Housing Administration. No, it doesn't stand for first home anything. What it stands for is Federal Housing Administration. What's interesting about the FHA is that they don't actually offer loan programs, but rather mortgage insurance. See, without FHA and the mortgage insurance that they provide to mortgage lenders, there wouldn't be a low down payment option available to you as a first-time home buyer. See, the risk would just be too high for a mortgage lender to take to offer a down payment as low as FHA allows. Without FHA or mortgage insurance, you'd have to have at least a 20% down payment in order to be able to buy a home. And that was actually the case prior to HUD implementing the FHA mortgage insurance program that allowed for lower down payments. The nice part is that with FHA, you can buy a home with as little as 3.5% down. But I guess I'm getting a little bit ahead of myself. So today, I plan to answer the question of whether or not FHA is a good program for first-time homebuyers like yourself. So I guess we kind of have to go back a little bit and say, what's unique or special about first-time homebuyers? Or what is it that a first-time homebuyer wants in a home loan? Well, the first thing that comes to mind is that generally, I would say, first-time homebuyers are younger in comparison to move-up buyers. See, according to the National Association of Realtors, who did a study of first-time homebuyers, what they found is that 88% of the homebuyers aged 22 to 29 and 52% of those in their 30s were first-time homebuyers. But what does this have to do with mortgages, and specifically FHA mortgages? Well, it has to do with credit. See, about 50% of your credit score is based off of the history of your credit. Well, the younger you are, the less history you have. So 35% of your credit score is based off of your payment history, and 15% of your credit score is based off the length of that history. So the less credit history you have in terms of payments made on time, as well as the amount of time that you have as far as history logged on your credit report, the lower your credit score will be. This doesn't necessarily mean that you're not going to have good credit or even great credit for that matter, but it does mean that if you were older and had more history, you would likely have a higher credit score. So again, what does this have to do with FHA, right? FHA doesn't have as much of a hit to those with lower credit scores in comparison to loan programs like conventional financing as an example. So let's take a look. When you qualify for an FHA loan, you automatically qualify for the mortgage insurance that comes along with it. And what's interesting about FHA's mortgage insurance is that it doesn't change based off your credit score. So it doesn't matter if you have a 600 credit score or an 800 credit score on FHA with minimum down payment 30-year fixed, your mortgage insurance rate is 0.85%. Conventional financing, on the other hand, doesn't even allow for loans below a 620 credit score. So we couldn't even offer mortgage insurance or a loan for that matter for somebody who has a credit score in the 600s. But if we look at, let's say, 620 as an example, you'll see on this chart here that the mortgage insurance is 1.86% or over double that of FHA. Basically, it's like having a 1% higher interest rate in comparison to FHA at a 620 credit score. Looking at this chart, you can see that you have to get all the way up to about 720 to get to that similar MI rate on a standard conventional 3% down loan option. So what else does younger have to do with buying a home and getting a mortgage? Well, a big part of it is just time to save money for a down payment, right? So you probably don't have 20% down, which is why you're interested in taking a look at the different options and why FHA may be a good choice. And one of the major reasons is that FHA only requires a 3.5% down payment. And the nice part about FHA is there's no special requirements in order to get that. You don't have to be a first-time home buyer. You don't have to be under any particular income limits or anything like that. FHA's minimum down payment is 3.5% in comparison to standard conventional financing, which is 5%. Somewhat related to time to save is that being a first-time homebuyer means you haven't had the opportunity to own a home. And owning a home provides some benefit in terms of housing appreciation, right? That you buy that home and each year the home is going to go up in value, which is building equity and therefore net worth. So for the non-first-time homebuyer who's going to sell their home and purchase the next home, a large portion of their down payment, if not all of their down payment, is going to come from the equity of the home that they're selling. As a first-time homebuyer, you don't have that opportunity, which is another reason why FHA and the minimum 3.5% down payment is going to be a great loan option for you. One thing a lot of first-time homebuyers find helpful is that FHA provides the opportunity to use gifts for down payment. Now, there are certain restrictions associated with who the gift can come from, and generally it's going to be from those people anyway. So it's going to be somebody that's related to you, like a parent or a sibling, someone like that. And so that's one nice part about FHA financing is the ability to utilize gifts to cover any down payment and closing costs that need to be paid for at the time of closing. So all of this begs the question, is FHA better than conventional financing, specifically for first-time homebuyers? Well, the answer is it depends. And it depends off of your particular situation. If you have a 720 credit score and 5% to put down, then FHA may not be the best loan program for you. Conventional may be better. If on the other hand, you have a credit score, let's say under 680 and would prefer a down payment less than 5%, then FHA may be a good option. If you're a high income earner, but you don't necessarily have a lot of cash to put down or don't want to put the cash down, then FHA may be the best bet. But I'll be recording a video soon about conventional first-time homebuyer programs, and specifically why you might want to select a conventional loan when purchasing your first home. So keep an eye out for that. So there you have it, FHA, Federal Housing Administration, and why I think it can be a great loan program for many first-time homebuyers. Did I answer the question you came looking for? If not, leave your question in the comments below and I'll be sure to reply. And if you found the info helpful, I'd love a click on that like button. If you're serious about making your first home purchase, then I've got a ton of great info for you to help make that possible. Check out these other videos as you work towards buying a home. Or you can call or text me and I can help you directly.